what's your view on analyst ratings and how do you use them or think about them?
This is a loaded question. Okay, actually, let's
Talk
go to
about
Rivian's
never
analyst
loaded question. I just like
analyst
to
rating.
set you up for a nice rant.
Yeah, yeah. No, this is okay. Let's put it this way. Bad analyst ratings does not discourage me on a company that I know well or industry that I know well. That feels like it's always been the case for me on whether throughout the years of investing, whether it's been like Apple or Twitter or Meta or Netflix or um, Robinhood or Uber or now Rivian, now Bumble. Analyst ratings are always like backwards looking. So if we look at like the latest ratings on Rivian, JP Morgan just like literally raised their target from $9 to $10 on Rivian. I feel like this is laughable. Why even bother just doing this at all? Or I don't know who
This is 2 days ago.
Mizuho is, but uh, VJ just lowered his target from $14 to $10 for Rivian. And I don't know what kind of things that they're basing these things on, but when I saw this exact same thing happen for like Robinhood, for example, a couple years ago, or Meta a couple years ago, 3 years ago, 2022 for Meta. I mean, it just never made any sense to me. Like these analysts are like looking at something different than I am. And what's funny is that like if we were to look at Robinhood right now, most analyst ratings are positive. Look at this. The buys on Robinhood, 74% is a buy, whereas 2 years ago, everyone was a sell um,
Right.
on
On
Robinhood.
Robinhood.
Yeah, so let me pull up the. Um,
So where's
oh,
Bumble
this
at
is
right now? Because
let
Bumble's
me do it on this side. Um, just looking at Robinhood for a second. Look at this. For example, JMP Securities raised their price target from $130 on Robinhood to 170 at a time when Robinhood is trading at 31 times sales. When it was trading at 4 times sales, these guys had it at a sell, right? Like now they're all like raising their targets to 157, 146. Everybody's got like these enormous targets. And like they're looking in the rear view mirror, meaning as the stock price has just completely like demolished everything and is up um quite a bit in the past year or so. Like if we look at the stock price in the past year, it's up 376%. Revenue, it hasn't even doubled, but stock price has almost 4x. So under what circumstances is your rating higher today than it was 1 year ago, right? Like it should be. That makes no sense to me. So I don't put a lot of weight in analyst ratings. If we were to look at Bumble, similar sort of thing where analysts right now, very few have it as a buy. 10% of analysts have it as a buy. Um, Most have it as a hold, and a few have it as a sell. But when you look at the sort of like current price targets at $7, this just seems like a joke to me. $6, $7, 7.50. So
What's the purpose
again,
of analysts publishing these ratings?
yeah, that's a great question. I mean, I actually don't know what the reason they they put price targets around, or like I guess people are looking to financial institutions for what are their recommendations on various different stocks. And a lot of people are sort of like making their buy sell decisions based on that, because when analysts do raise their ratings, stocks do go up,
Right.
and inversely when they lower their ratings, they do go down. But the fortunate things about like companies like Rivian and Bumble is that they can't lower their ratings much more. They're already pretty bad. So, that is a very positive thing, because when most analysts are on the sell side, if you get it right, meaning like if you're right about the company and the company comes around and like does really well, guess what's going to happen to the analyst ratings? They're going to start going up. And usually they go up in the rear view mirror. So after the Bumble becomes a 10 or 15 or $20 stock is when analysts are going to start increasing their ratings because they're going to look like idiots if their price target is $7 and the stock is at 20. So what do? They re-rate it and they're like, new price target $25, and now the stock actually goes up even higher than where I think it should be. So I don't put a lot of weight in analyst ratings. I do my own ratings and buy based on that.
What about when you're investigating like a stock for the first time? Do you ever take them into consideration, or even then, not worth it?
I don't think I've ever like looked at analyst ratings initially in
Mhm.
getting excited about a stock. But obviously it comes up because once I start buying a stock, then I see the headlines because I'm closely monitoring, and then like it'll be like, oh, JP Morgan raises or lowers the target estimate for a particular holding or whatever.
Sure.
So it does come up in that way. Another thing I see people like on X especially talking about is like all these technical analysis about like the 200-day moving average. Like, why would you ever buy a stock that's like breaking its 200-day moving average going down, or like going, why wouldn't you wait until it goes up or whatever? I'm like, I've never even looked at the 200-day moving average. I don't even know why that would be important at all. Um, so like the historical performance of a stock is not a good indicator, in my opinion, of its future performance. What would be good indicator is the historical performance of their actual execution of product roadmaps and revenues, like that come from those products, and their execution in that way. And when you looked at Robinhood over the past couple of years, um, they were executing beautifully. Their product just kept getting better. They were like nailing all the little things and introducing new products, and their revenue was like small, but growing rapidly. And like those new products were generating a little bit more revenue here and there. But then like there was a lot of inflow of cash coming into the company from other brokers. Those were all the right signals that I was looking for Robinhood. And all the analysts missed it during that rise. And then like now that the Robinhood is crushing it, the analysts are raising their ratings, and it's just like, all right, welcome to the party. but now I'm like on my way out of the party. Or at least I have a half a foot out the door, not
Right.
not completely out the party.